the big thing is auto manufacturing. And I think there's a little nuance here of auto manufacturing versus EV auto manufacturing and EV related sales and distribution. What are your takeaways about this tax bill and how it relates to auto manufacturers and anything related to that industry?
Yeah, it seems like, and obviously Elon got a little bit upset the other day, and there's a little bit of a rift that some of the EV tax credits were going to be removed or eliminated. We need to remember that, part of this bill, you can't just spend money without raising money. They have to have tax revenue to cover a lot of these things. And if you're going to give somebody a tax credit for their EV purchase, that's effectively revenue that's lost that has to be made up somewhere else. And so that is effectively what they're doing. We're getting rid of a credit in order to make up revenue for some other shortfall, or we're wanting to spend in some other fashion. This really is not a spending cut bill. We are increasing our spending, and therefore we have to find ways to recoup that tax revenue. So it does seem like that is one of the mechanisms that they're going to use to do that. You mentioned the state and local tax. Hey, we're going to kind of find some balance. We're going to increase the SALT deduction some, but we're also going to close the loopholes for the others that were the bigger earners that were taking a much greater state and local tax deduction through that pass-through entity payment. So um, it is interesting because that's kind of a EV versus auto. I think in general, it seems like Trump's agenda has always been to bring back more manufacturing, bring back more jobs to the United States. And so we're going to see some additional spending from, not just auto manufacturers, but all of the ancillary industries that surround it and just, industrial manufacturing in general. We're probably going to see the beginning of a new boom in that era. Deregulation is going to also contribute to that.